Welcome to The Business. I'm Lanre Akinola. On this show, we break down business and its impact on Africa and Africans. Business affects every one of us, whoever we are, wherever we are. In this special edition of The Business, we're looking at the practicalities of investing in African companies. Earlier in the series, I had the pleasure of interviewing two people with very different perspectives. Michelle Esome is the CEO of the London-based African Venture Capital and Private Equity Association. She looks at the opportunities on the continent from a global perspective. Eric Osiakwan, on the other hand, as managing partner of Accra-based Transo Capital, is an African investor on the ground who specializes in investing in African tech companies. First, Michelle with her bird's eye view. Welcome back to The Business, the show where we break down all things business in Africa. I'm delighted to be joined by Michelle Esome, CEO of the African Private Equity and Venture Capital Association. Michelle, thank you very much for joining me today. Now, private equity has been part of the African growth narrative for some time. Since the mid-2000s or so, private equity has arguably been amongst the most active asset class when it comes to doing business on the continent. We're just coming out of a 2-year downturn, which has seen growth slashed across the continent. Give us a bit of an insight into how the private equity space has been affected by this.
I think when you have a downturn, that's an opportunistic time to pick up opportunities. The thing to realize about Africa is to look at the fundamentals. So you have a rising population, a population with increasing disposable income, and people like to buy things and, send their kids to private school. So the Africa rising narrative that based on the consumer and funding businesses that are related to consumer, whether healthcare, agriculture, telecommunications, is still strong. If we think about like medium-term trends, fundraising has been relatively stable, except for 2015. Deal making in Africa, I really want to highlight, is a growth equity market. It's not buyouts that we're going to see in the developed world. So they're deals that are 5, 10, 15, 20 million in size, perhaps with additional capital raise, but it's not a global buyout market. And those things are stable. So, optimistically, and it's
your job to be optimistic.
It's my job to be optimistic.
It's my job to be a bit skeptical.
Okay.
Now, investors are quite fickle. You're right. The fundamentals in Africa haven't gone away. Maybe some of the shine has come off, and we have gone through the cycle. Have you seen a shift in perception?
Yeah, absolutely. I mean, I think that unfairly, thinking about investing in Africa, sometimes they seem incongruent, and that's absolutely wrong. That's our job at AVCA to change that perception. So, in 2015, post 2014, the kind of the narrative about Africa for those who hadn't traveled or invested or who knew, it took on sort of a life of its own. So people think about, transparency and good governance. And what we try to tell international investors is that's not something you need to worry about. If we think here in the UK, CDC, the large development finance institutions have been investing on the continent of Africa probably 20 years, not just through grants, but investing in private companies and putting money in fund managers. And because their source of funding are taxpayers like you and me, there's a huge focus on environmental, social, and governance and monitoring that. So, for commercial LPs that want to think about Africa, take some comfort. And you don't have to worry that somehow commercial returns are sacrificed because, it's not the case.
And one thing that we have seen in private equity in recent years is that there's more domestic capital being mobilized as well. Has that been able to maybe offset some of the...
And that's a really good point, because I think that it's important to have your friends and family investing with you as well. And your friends and family being, the local pension fund in Nigeria or Kenya or South Africa, but also other Africans. And I think that's really a positive thing because, I think we've seen kind of this idea of Africans investing in themselves. So you've had PIC that's over the last couple of years.
That's the South African Public Investment
Exactly. I think they manage more than 150 billion, so a very powerful African LP, multi-asset manager, very sophisticated. They made their first investment outside of South Africa into a small manager in Cote d'Ivoire, PCM. And we're seeing a lot of that around the continent, sort of, their understanding of alternatives, the understanding of private equity, the understanding of the power of private equity. Because PE as an asset class, I think is very, very different than others, because a private equity firm is investing in, let's say, a school. And if they improve that school and build other schools and people they employ, that puts more money in circulation. So it's one asset class that really kind of raises the game for everybody.
We've seen commodities rebound.
Right.
Growth figures are back up again. Presumably that's going to be reflected in the PE space. What are some of the sectors, some of the countries, some of the markets that you think are going to be leading the comeback, so to speak?
Yeah, I mean, I think you can't say you're doing business in Africa without Nigeria. Yeah, so I think Nigeria, in terms of West Coast play, will always stay strong. We did our annual LP survey. East Africa came up as a region that investors are looking at, so Ethiopia, Kenya, Tanzania, Uganda, and also Francophone Africa, Cote d'Ivoire, very strong GDP growth, ease of doing business, a government that is welcoming FDI. That's a new trend,
because Anglophone Africa has long dominated the investment space. So what's behind that? Why are you seeing Francophone Africa come through?
Because I think as investors, we're always looking where other people aren't. I think that the GDP story, as I said, is a good indicator of growth, and whether they're government policies that are accepting. We were in Cote d'Ivoire. We took about 500 investors there for our conference last year, and there was so much excitement. The African Development Bank has moved back. So it's like sort of a confluence of things that says, look, come, this is a good place to invest your money.
Now, oil is back up, minerals are back up. Are we going to see money just basically go back to what it knows? And are we going to see people investing in oil and infrastructure and that kind of thing?
I certainly hope so.
Okay, please expand on that.
I mean, I hope so, but I think the theme again for Africa PE is around consumer related. But I think we definitely need infrastructure. You need good roads. You need to create secondary cities, secondary to Lagos or Nairobi or Johannesburg as population increases. And we need all of those things to facilitate productivity. And infrastructure is a huge theme for the African Development Bank, as well as a number of PE firms. So yeah, I'm optimistic positively, because I think at the base the fundamentals are there. Where do I think the sectors are going to be? I think healthcare and education are huge. If you're a wealthy family, you want to be able to stay in country and not go abroad for healthcare.
Just a quick follow-up on infrastructure, because that's not an obvious thing to invest in Africa. It's not a sector that's known for higher returns. Why is it that private equity would be interested in infrastructure? How do you make that work commercially?
Because I think there's a huge gap, and as an asset class, we're always going to look at where we fill the gap, and how do you do it intelligently? So you'll have fund managers like AIM out of South Africa, or in terms of infrastructure, either the towers business is an infrastructure.
That's mobile telephone.
Exactly.
Mass,
so
right?
IHS towers, Helios towers, all of these businesses are infrastructure. So yes, I think it isn't easy. I think you need good people who can bring projects, who have relationships with the governments in the particular countries. And I think we have a number of players that are doing that now, in conjunction with African Development Bank or multilateral agencies.
You're going to be convening investors in Marrakesh in April for your annual event. Where does North Africa fit into this picture? We're seeing some more investment come down into the Sahara. Are you excited about that? Do you think that that's a growth area?
When I joined AFCA, I was really insistent that we look at the continent on an entire basis, that we couldn't say sub-Saharan Africa and then North Africa is left with MENA. Look, I understand the historical relationships in language, but I think that Africa, and many of our members like Africa-Invest and ECP also do that. So what is happening now that I think is really positive is we've gone through the Arab Spring. There are a number of countries that are ripe for investment, including Egypt, Tunisia, Morocco. A number of these North African countries are thinking about what their sub-Saharan Africa, which is very smart and right to do. So I feel like there's this mingling that's happening, and we're thinking about, again, to Africa's doing them for themselves. How can we find investment opportunities to move the continent up and also to make money?
One final question. Let's say I'm an international investor looking at Africa in 2018. You've got 30 seconds to convince me to do business on the continent. What's your pitch?
My pitch is, if you are putting money into emerging markets, you cannot not put money into Africa PE. It's an industry, although adolescence, that has, let's say, a 15 or 20-year track record of attractive exits to global buyouts at attractive prices. And I think it's something where, as an investor, you can make money and also feel good. And that there are commercial LPs like yourself, foundations and endowments, family offices, high net worth individuals, pension funds who have done it before you, who can guide you, so you can take some comfort. So come to me for some names.
Well, you've convinced me. And Michelle, thank you very much. Join me in part 2 for an interview with Eric Osikwean, managing partner of Accra-based Transo Capital, who gives us his perspective as an African investor helping African businesses. Welcome back to this special edition of The Business, the show where we break down business and its impact on Africa and Africans. I'm Lanre Akinola. On this special edition, we're looking at investment in Africa. Early in the series, I had the pleasure of interviewing two people with very different perspectives on doing business on the continent. In part 1, we revisited the interview I did with Michelle Esome, CEO of the London-based African Venture Capital and Private Equity Association. Michelle looks at the opportunities on the continent from a very global perspective. In part 2, we'll get an on-the-ground view from an African investor helping other African businesses. Eric Osikwean is managing partner of Accra-based Transo Capital, which specializes in the African tech market. Why is this an exciting time for tech in Africa?
What is very interesting is that 2 decades ago, Africa decided to leapfrog into the information age, and we went straight to mobile. To the extent that in '98, there were more landlines in Manhattan than the whole of Africa. By 2008, there were more cell phones in Africa than the whole of the United States. And this kick-started a tech revolution. And in 2008, I was part of a team that built the first submarine cable to connect East Africa to the rest of the world. And so those submarine...
Is that CCOM, right?
That was Teams. There was Teams before CCOM, but CCOM came right after Teams. Right. And those submarine cables then brought broadband to the continent, and those broadband connected to the cell phones. And suddenly, Africans began to experience the internet purely through their cell phone. So in Africa, the cell phone is the device of access. And suddenly we began to see entrepreneurs, young Africans, begin to develop technology using their cell phones and begin to address challenges within their communities. And this is a very strong paradigm shift, because when I was going to school, the in thing was finish school, get a job, or leave the continent. Today, it's a cool thing to be a startup CEO in the tech space. Like, a lot of young guys just pride in being entrepreneurs and starting their own business and realizing their vision. And I think that's a very strong paradigm shift that we've seen just in the last 2 decades because of the availability of mobile and the fact that there's an entrepreneurial spirit within the young Africans that they want to express. And as you said, this has ignited a lot of investment and attention across not only the continent, but globally, even to the extent that Silicon Valley investors are beginning to invest in Africa. So this is a very important phenomenon, and I believe that this phenomenon is backed by certain facts. One of them is the returns on mobile. So if you invested, a study that was done by Freshfields that looked at the impact, the returns on telecom, media, and technology companies on 40 stock exchanges across Africa. The annualized return over a decade was 19%. In other words, if you invested in MTN, you made 19% annualized return, which is higher than oil and gas, which is 6%. So actually, the tech sector has been given the biggest returns commensurate to investment.
We know about the mobile story in Africa has been one of the big global success stories recently. Right. Mobile money has become an international story out of Kenya. But mobile operators don't represent the tech entrepreneurship space. I mean, it's a relatively old-fashioned business, even though it is on mobile. Give us a bit of a sense of what the environment looks like, because yes, there has been a paradigm shift, but it's still a difficult operating environment for your average tech entrepreneur, because just as any business is hamstrung by lack of power, lack of infrastructure, et cetera, that will apply even more so if you're a young person.
Absolutely. But what this young generation is doing is building on the success of the mobile generation, right? So these guys build the mobile networks. They're like, we are not going to bring the creativity on top of it. So for me, we're in the second phase. We've kind of moved to gear 2. Gear 1 was connectivity. So mobile, submarine cable. Gear 2 is now creativity. So these guys are beginning to realize that actually I can build the next Facebook. I mean, imagine a young African who lives in a place that, like you said, there's no power and it's hard to even get access to broadband connectivity, to even dream they can build the next Facebook. I'll give you an example. One of the companies I'm invested in was 2 guys from out of college, KNUST in 2005. And this guy decided he wanted to build a mobile value-added service company in Ghana and reached out to me to be an advisor. And for me, these were 2 guys out of college. They believed in themselves that they could build a business. The company turned cash positive in the second year and went profitable in the third year. And the company has been growing between 26 and 34% year on year. Today, the company is on track to make 20 million US. And we are now in 4 countries. We're in Ghana, we're in Nigeria, we're in Kenya, and we're in Cameroon. Now, this is an example of a young Ghanaian entrepreneurs who believed in themselves and beyond all odds that you mentioned, have been able to build a company on the back of the mobile operators.
But aren't these the exception rather than the rule? Isn't this what makes the entrepreneurial story so appealing, is that it's against the odds, you're defying the odds. But that means for every one of those success stories, there are many
that fail.
Many
Correct.
that have failed.
And it's the same in Silicon Valley, it's everywhere in the world as well, and even in London, right? But the fact that if you succeed gives hope and gives a certain sense of, I can do it too if I try. We do a lot to try and bring the various actors within the ecosystem. So making sure that government is engaged, making sure that the academic institutions and research organizations are able to provide the R&D that is needed to power these entrepreneurs, making sure that civil society is there as a market and can provide the opportunity for these entrepreneurs. Even the cultural change where Africans begin to value what is built in Africa.
But that's very different from your traditional VC's role. I mean, your traditional VC looks at your spreadsheet, looks at your earnings potential, and that's kind of it. So do you need a different kind of attitude if you're moving into African tech at this time?
So this is why chances were different. And this is why I decided to build this firm. I started as an entrepreneur, I built a bunch of companies and succeeded in some of them. And I realized that there was an opportunity for me to build a different kind of VC that fits Africans' model. The Silicon Valley model is different. The London model is different. The Asian model is different. Africa's model is going to be different. And it speaks to the fact that, like you said, you have to be a little bit more, you have to think a little bit more broadly, and you have to be more inclusive and figure out how you can work with various actors to create the right environment for success. Because if you don't create the environment, you will lack the ability to have very successful entrepreneurs. And this game is all about success, right? You have to be able to build product that succeed in the marketplace. You have to be able to then build companies that become big and they grow and they cover the continent. So we really believe that it's an opportunity where we can take entrepreneurs from one country and grow them into Africa.
To pick up on that point, start in one country, grow them into Africa. When you look at the numbers, there are 3 countries that completely dominate. It's South Africa, Nigeria, and Kenya. Right. They attract something like more than 3/4 of all funding that goes into tech in Africa. So when we're talking about tech on the continent, it's not really an Africa story yet, is it? It's driven by certain markets. What needs to happen for this to become a truly Pan-African story?
You're right that certain countries are leading, and actually I add 2 more countries to that, which is I add Ivory Coast and Ghana, which makes the King's countries. So our fund is actually called the King's Fund, which is that we decided that can we take 5 countries that are really leading this park? And we added Ivory Coast because half of Africa is Francophone, so you cannot ignore that entire market, right? And Ghana, to that extent, we believe is also very strong in a mix of that. And we actually have a criteria that we use, which we can talk about later. But I think that having these 5 countries, they set a certain benchmark for the others to follow. And so it's not exclusionary. It's more saying that these guys are really doing so well. You must try to be in the A team. And I believe that other countries like Rwanda, Senegal, Cameroon, Uganda, a few other countries are really inching up. And I think that's what we should aspire, that all countries will start seeing this as an opportunity to get up to that level. But yes, certain countries are leading the pack.
What excites you about tech in Africa? Where do you see the real opportunities? What are the sectors that are really going to drive the tech entrepreneurship space in the next few years? Because we've spoken a little bit about Andela, which is a development company. Yeah. There was a recent investment by TPG, which is a big a US private equity company into fintech. Fintech seems to be quite exciting. There's been a lot on retail. It feels like we might be moving into another phase here. What are the sectors, what are the niches that you're looking at where you think the next big thing is going to come from?
So if you take the fintech space, right, I agree with you that we are in what I call the second generation innovation. I'll give you an example on an investment that we made last year. So this company is based in Kenya.
We've got 1 minute left.
Oh,
so.
Okay, so this company basically on the back of mobile money is built an algorithm that is able to generate a credit score, and on the back of the credit score, they provide lending. Now, this is a very big problem in Africa where people don't have a credit history, so you can't provide lending. Now, they've been able to figure out how to build this using mobile money and your mobile phone activity, and the company was making 98% repayment. And that's why we invested. And this entrepreneur was a 26-year-old guy, and this was his third startup in Kenya. So this is somebody that you kind of, you have to support this entrepreneur, because being able to figure out how to build such a system is just incredible.
Now, you're obviously excited about tech in Africa. Very quickly, what needs to happen in the next few years to make sure that the continent doesn't just build on this momentum, but really gets the full value out of the potential that's out there?
I think that successful Africans need to reinvest in the young generation. And this is what I'm doing. I believe that the way societies grow is that those that have gone ahead do not only invest their capital, but their experience and help the next generation. So the generation that's ahead should look back and give back and help bring the other generation up so they can do better than us.
Well, there's no better way to do it than to lead by example. Eric Osiakwan, thank you so much for joining me on The Business today.
It's a pleasure.
That's all we have time for. Thank you for joining us on this special edition of The Business.